Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Well, here we are today, guys, on Thursday, March 6th, 2008, and what a drop we had today in the markets. It was key for multiple reasons, mainly for the fact that we closed below the pivot point of February 7th. Now, it's never that simple, and I want to stress that today getting into the video. You guys know we talk about seeing confirmation moves, and there's a few other factors that we need to watch, but there's no doubt at this point that that was a bearish move today, a significant close below the February 7th low, and is definitely something we need to focus on and watch now, because it's if we do confirm this, it's just a hop, skip, and a jump to January lows and then to new lows in the market. Now, the NASDAQ closed down about 52.5 points, down 2.3%. The Dow closed down about 214.5 points, or 1.75%. And the S&P 500 closed down 29.5 points, or 2.2%. Now, it's not that simple because now we saw some dramatic declines today, and I'm going to show you. You're looking at the ES futures chart here intraday. Now, the futures chart is basically a steady decline all day, but if you actually delve into it, it's very interesting to say the least because of the differences in moves and how things came about. Now, essentially what we did today was just follow the 20 moving average all the way down. There was no major sell-offs, huge sell-offs here, although towards the end of the day, once we broke that February 7th low, and this is the key about it, guys, it's almost a classic setup, because I'll go into what happened in the chat room and what we were discussing, but, we all know that Gasparino, Charlie Gasparino, the CNBC on-air editor, I believe is his title, he seems to come out every day at 3:30 with some news. Well, sure enough, you're looking at the market right over here. Here's 320 or so, the 320 candle, right? Well, you're selling off here in that normal trend channel right here, and all of a sudden you get people starting to buy up right into that. And sure enough, he comes on right before 3:30, and the market sees a little bit of pop, but the news was insignificant. I can't stress enough, it was not a big deal. And at this point, when you expect him to come on every day, or any media agent, as a matter of fact, they have to continue to outperform. It's like a stock like Google. All right, Google can have great earnings one month or one quarter, and the stock will go up huge. And they have greater earnings the next quarter, and it'll go up big again. But they have to continue to outperform the previous quarter even more to the upside, and eventually it's just not doable. I mean, unless you're going to announce, the cure for cancer or something like that, it's just not going to happen. So unless we got a pure and simple bailout of these bond companies, bond insurers, you're just not going to see the same type of move. So again, as soon as that news was out, and it wasn't anything major at all, it wasn't even breaking news or anything like that, it was just some comments, the market started to sell hard. It sold right into the close. Right after the close, we got a little of a bottoming tail right here, and we went up a little bit into the after hours activity when the market closed, or the futures closed. And again, the futures closed at 4:15 instead of 4 o'clock p.m. Eastern time. So again, just to take a look at this chart, I mean, you could just draw a trend line on top of all these moves, and you basically see it right here. And it focuses in on the 20 moving average all the way down intraday. But if you start right here from this 7 o'clock candle or 6:45 candle, somewhere in there, and you just draw that line following the whole trend, you got pierces above the 20, which were above this trend line, but you never really got anything significant. And I just want to focus in on this because we actually sold off most of the day, and then we started to find a range in the mid to late afternoon. And we were staying in this range, and let me draw that in just a little more accurately here, right around here, okay? And you guys can see exactly what's going on here. You can see how we're focusing in on this range, and we're trading sideways. So ever since 12 o'clock, so 12 o'clock's right here, we dip below, and then we start range trading. And range trading is significant because you see here, we go up, down, inside that trend, and each time we tried to tick above the 20 moving average, all right? And notice how in this candle right here, we were actually above, and we actually closed right above it. But look at the next candle. There's no confirmation there. No confirmation above the previous high, which was above the 20. To me, that's a dead indicator. And in this market, which is a bear market, mind you, you have to wait for confirmation, because in a bear market, the market has a tendency to go down. So unless you get confirmation on the upside, you have to assume the negative. Well, anyways, we never got confirmation. We did it again here, never got confirmation. Finally, the market started to shake out to the downside. Then Gasparino comes on CNBC. You get a little pop, but immediately it sold into. As soon as it hits that 20 moving average again, that 20 moving average was like cyanide to the market today. The second it hit, it would wither and die and fall apart. So again, you can just see it throughout the day. All right, right here, even right here where it almost got there, right here, right here. Right. I mean, I could name 5, 10, 15 places on this chart where it hits that point and just fails. So, needless to say, we had a hard sell-off into the close there, and the NASDAQ closed down 52. The ES was down dramatically as well, along with the S&P and Dow. So, not a pretty day, guys. There wasn't much out there that got spared. Baidu, of the four horsemen that we follow, which are Google, Baidu, Apple, and Research in Motion. We also throw Amazon in there. Baidu, BIDU, was the only one that was positive. Google got smacked for another $15, and this stock just, it actually was up yesterday, but I mean, geez. This is the weekly chart, and this is a weekly, so this is every week it's been down. It's only had 2 small weeks where it's had positive closes right here. Ever since the first of the year, I mean, look at this. Look at this top, first of all. What a great top on that chart. And let's switch to the daily so we can actually see things a little more clearly at first. Then we can always go back to the weekly. I love looking at the weekly chart. Just like on the 10-minute intraday, I like looking at the 10-minute, but then I like to look at the 60-minute because it gives you a broader view and a better analysis technique to go about finding the exact moves in this market, because these charts will tell you the truth. There is no doubt in my mind that every move out there can be choreographed by looking at what formations there are, what volume candles there are, what technical tools there are out there. Now, most technicals lag, but we usually use price, volume, and time in the analysis here, and pattern. Pattern's key as well. All right. So anyways, there's the Google Daily, and you can see yesterday it had a small little move up there. Today, just got smacked down again. And I mean, this fall on Google, for one of the strongest stocks of the near-term history of this market, this stock has just been mutilated. Oh my goodness. In any case, folks, enough about that. Let's focus in back on the markets, because on the NASDAQ, we closed below February. By the way, this is a new 52-week low close on the market too. It's not a new 52-week low, it's just a new 52-week low close. Because again, we were much lower down here in January, but we never closed down there. Now, we're very close on the NASDAQ. In fact, look at that. We're very, very close to it. If you really want to split hairs, you want to go to the bottom of this tail down here and draw the line. But either way, you can see that we're coming up to that support on the NASDAQ. Now, again, we talked about how this pivot point is key, but guys, please don't forget out there that the government is lurking, the Fed is lurking, the bailout plans are lurking, and so it's one of these markets where you're in a tight bind. At least I know I am, because in some sense, I say, well, we broke the pivot point to the downside. If we confirm it tomorrow, sure, jump on the short board because we could be going down huge, and that's very, very well may be. But at the same time, you have to say in the back of your head, this little voice is telling you, okay, yeah, but the government could bail out this. The Fed could cut interest rates tomorrow instead of next week when they're planning on it, or 2 weeks from now. They could have a huge bailout plan. Something could happen. There's just so much up in the air that it makes it an incredibly insane market to go short or long. So all we can do here is play small moves on chart setups. We hold a stock for a few days. We look to go short. Ultimately, I have a hard time going short overnight. I almost feel more comfortable, never mind. No, I don't even feel comfortable going long overnight, to be honest. I just can't. I mean, if anything, I buy 100 shares of a $50 company like QID or QLD and just play 100 shares, which is nothing in the terms of money. At least for not the size that we're trading here. Some of you guys out there, that may be significant, so you obviously want to reduce that size. But my point here is this, is that there is there's so much up in the air that it's just unbelievable. So the only thing you can do is play to the cautious side and be very, very safe. Now again, let's look at the SPY as we get in towards the end of this video. And you can see again, here's February's low. Look at where we are. So the market has closed below, but we need to see confirmation. If we can see confirmation, then you may see a move down to the lows all the way down in this area on the S&P and of the SPY. That would be in the approximate range of, let's see here, about 126.5-ish, give or take 126, which is basically the 52-week low. But again, we need to see confirmation. We also have to always keep in the back of our heads that there could be a surprise announcement at any point. It would not surprise me to see the government come out with a bailout plan. It wouldn't surprise me if even before the Fed meeting on March 18th, they cut rates again. They're going to cut it anyways. They might as well do it sooner than later, in my opinion. And it would not surprise me to see some other news that's market moving, which could try to bail out this market. All right. Don't think that the president. Don't think that the working group. All right, president's working group, which is the PPT, the plunge protection team. Don't think that all these players at Goldman Sachs don't know these technicals that I'm pointing out to you. This is what they use too. All right, they may go by fundamentals as well. We don't believe in that, but at the same point, they know breakdowns just as well as anyone else that studies this stuff, and they have technicians just like we do here, and they know that if key levels are broken, this market could get into panic mode. All right, and they're going to try to help this market out. I purely believe in that. Now, again, that doesn't mean we're not going here. Ultimately, we're going to January lows on the SPY and lower, I think. But I'm saying just to be cautious going into this. All right, guys, come join the chat room. We do the e-minis now. We do the day trading. We do market analysis all day long. It's just a phenomenal technical tool for every person to learn. And you just pick up things being in the chat room. Join the swing trade alerts and just come join us. We do private consulting as well. Have a wonderful day, guys. Talk to you soon.